This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
Record-setting day, the Dow and S&P catapult to new highs. How solid are the gains, though? And can this rally really be trusted?
Stress test. He was one of the most pivotal and controversial figures during the financial crisis. And tonight, former Treasury Secretary Timothy Geithner defends his actions and reveals what he would do over if he could.
Love a sale? Well, not everybody does. And the big promotions could pinch some retailers' profits when they report their earnings. All that and more tonight on Nightly Business Report for Monday, May 12th. And good evening, everybody. I'm Tyler Matheson.
I'm Sue Herrera, in tonight for Susie Guerin, who is off. Well, what a way to kick off the week on Wall Street. Another record-setting day for the markets, with the Dow Jones Industrial Average and the broader S&P 500 both closing at fresh all-time highs. And a rebound in beaten-down momentum stocks helped the Nasdaq see its biggest one-day gain in more than a month. Here's how things wrapped up on Wall Street today. The blue-chip Dow stocks added 112 points, ending at a fresh record close of 16,695. The Nasdaq was up 72, a nearly 2% jump, and the S&P was up 18, closing at a new high of 1896. So what was behind today's rally in stocks? And what may happen in the markets in the days ahead? Well, Bob Pisani has more.
Stocks started up and stayed up today. No late day fade at all. The Dow Industrials, the Dow Transports, and the S&P 500 all closed at historic highs. Now, several factors kept the rally going all day long. First and foremost, there was stability in the two most volatile groups, the Internet and the biotech stocks. The Nasdaq Internet Index and the biotech ETF both gained more than 3%. Other sectors that have underperformed the market this quarter, the banks, the home builders, and the retailers, all posted strong showings as well. That quieted concerns that the recent sell-off in internet and biotech names might spread and infect the broader market. Second, bond yields were higher across the globe. The 10-year Treasury was safely above 2.6%. Third, China and India had a very strong showing overnight. Chinese stocks had a 2% pop on speculation authorities would open up more of the domestic stock market to foreign investors. India popped another 2.5% to close at another historic high as the national elections there have finally concluded, and it appears pro-market proponent Narendra Modi is ahead in the opinion polls. The final results are due out May 16th. And what would keep this rally going? Better economic news. This is a very big week, starting with April retail sales tomorrow. We're looking for an 0.5% increase over March. Later in the week, we get April industrial production and housing starts, along with the inflation data. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And a big merger to tell you about in the food industry tonight, combining a lot of top brands under one roof. Hilscher Brands, the maker of Hilscher Farm luncheon meats, Jimmy Dean's sausages, and Ballpark Franks is paying more than $4 billion for Pinnacle Foods. Okay, what does Pinnacle own? Well, they got Duncan Hines, Hungry Man frozen dinners, Wishbone salad dressings, and Vlasic pickles. What a picnic you could have here. Shares of Hilscher Brands fell 3% on the news, but investors gobbled up shares of Pinnacle. They soared more than 13%.
Makes you hungry. All right, another possible merger is facing a lot of scrutiny. Pfizer is defending its proposed takeover of British rival AstraZeneca, insisting that the $106 billion bid will benefit shareholders and that any promises made to UK officials regarding jobs or paying its fair share of British taxes will be kept. Here's Pfizer's CEO, Ian Reid.
When you look at this combination, it really meets the scientific needs. It meets needs of efficiency. It meets needs of strengthening our balance sheet and strengthening our fiscal position. And it allows AZ shareholders to, number one, get an immediate benefit from the cash that we would pay them. It allows them to participate in a very strong combined company with great cash flows and great portfolio. And it allows a very efficient allocation of capital by the combined company.
This week, two British parliamentary committees will hear testimony from Pfizer about its bid to buy out AstraZeneca and what it means for the company and its workers.
An update on another big takeover attempt, much in the news these days, the unsolicited $46 billion offer by activist hedge fund manager Bill Ackman and Canada's Valiant Pharmaceuticals to buy out the Botox maker Allergan. Well, it was rejected by Allergan's board today. Allergan says that Valiant's uncertain long-term growth prospects and business model create a risk for Allergan shareholders.
Former Treasury Secretary Timothy Geithner giving straightforward and honest answers about efforts to bail out the nation's banks in order to rescue the U.S. economy from the depths of the 2008 financial collapse. It is all covered in his new book, Stress Test: Reflections on Financial Crises, and that book is out today. Andrew Ross Sorkin spoke at length with the Treasury Secretary, and he joins us now with more of that conversation. And it was a pretty wide-ranging one at that, Andrew.
It was, Sue. Thank you for that. I did sit down with him ahead of the publication of this book, Stress Test. Of course, Secretary Geithner, a polarizing figure in the country, in part because he became the face of the bailouts, the $700 billion TARP program. And I started our discussion by asking him about a criticism that Senator Elizabeth Warren has made repeatedly about his efforts to focus what she believes are more on Wall Street than on homeowners. Take a listen.
If you want to protect the average person from the risk of mass unemployment, you have to make sure the system, the financial system, doesn't collapse. You have to keep the lights on. I mean, what's the best way to think about it? I don't know, you're in a plane. You're in the cockpit. The engine's burning. There's smoke filling the cabin. You got a bunch of terrorists on board, or people who built the plane, or somehow, messed it up. And they want you to come out of the cabin and, beat up the bad guys. But you got to make sure you land the plane first. When you land the plane safely, you can figure out how to make sure you can bring a measure of justice to the people who are responsible. But your first obligation, and the only way to make sure you're preventing mass damage, is to make sure you are protecting the people most vulnerable to the fallout from a panic.
Okay, but then the second critique would be you landed the plane safely, but when there was an opportunity for reform, to truly reform the system, to fundamentally perhaps even change the system, you didn't take it.
I don't agree with that. I sort of understand that perspective, but we did transformative reforms to the system, much stronger consumer protection, much better authority for the cops than we had before the crisis, and a set of protections against risk-taking that make the system today a much more stable system.
Today, some people would suggest the banks are still too big to fail, if not too big to fail squared. They're bigger than ever. True?
I think that Americans should be much more confident today that we have a system, again, where we can be indifferent to, safe from the failures of individual firms. We're much closer to that reality than we were, I think, any time in the last 30 years, because banks are forced to run much more capital. We limit the size. No individual bank can be more than 10% of the banking system through acquisition. That's a much tougher constraint than exists anywhere around the world.
There's a point in the book where you go to visit Bill Clinton. Talk about a couple of things. One being whether there's a way to persuade the public, perhaps, that what you're doing is the right thing. What did he tell you?
He said the basic reality, and it's a sort of a human thing, is that people wanted blood. And you could take your pick. You could take out your favorite investment banker and slit their throat in the alley, and the next day people would want more.
To the extent that part of your job on the political side is persuading the public that what you're doing is the right thing.
This is kind of hard for me. I wasn't that successful at it.
If you could go back and do it again, is there something you would have done differently on that piece of it?
I don't know. I mean, I think think about it this way. I mean, it's not my natural talent. How can you convince people that something that was still so terrible, the worst recession in our lifetimes, could have been worse? It's hard to use a counterfactual argument to convince them that what we did was necessary, actually effective in preventing a Great Depression, since what they experienced was was a terrible thing. And we had this other burden, again, which the things you have to do to protect people from worse damage just are going to look terribly unfair. Again, it looks like you're rewarding the arsonist.
Tim Geithner, of course, his legacy still in question. He saved the system, but some believe the system, at least as it stands today, maybe shouldn't have been saved. So there we have it. We will see how history ultimately judges this man's legacy. Sue.
The book is not without controversy, though, Andrew. As a matter of fact, Glenn Hubbard took issue with some of the things that the former Treasury Secretary put in the book. Can you elaborate on that?
Neil Barofsky, too. There's been a number of controversies that have emerged over the weekend about this book, in particular the Glenn Hubbard piece that you mentioned. There's an anecdote in the story that Geithner recalls where he talked to Hubbard during the elections when Hubbard was working for Mitt Romney. Apparently, he said, or Geithner said, that Hubbard told him after the elections, if Mitt Romney were to win, the Republicans would have to raise taxes. Hubbard has since come back and said Geithner is a liar. And in fact, he never said any such thing. There's been a back and forth. Geithner has come back and said that he remembers it crystal clear, is what his spokesman said. And so it's going to be a bit of a he said, she said.
Let's go back to that passage there in your interview with him where he said very carefully, we are closer than we've ever been in the past 3 decades to a place where we're sort of inoculated from the failure of a big bank. That felt to me like very careful word choice, like, hey, wait a minute, if Bank of America or Citi or Chase ran into a cataclysmic problem, we're closer, but we're not quite there to saying, let it go.
So one of the most amazing things that I can recall from the interview that I did with him this time, and I've been interviewing him over the past month, in fact, was a time I went to visit him at he taught at a class at Harvard with Larry Summers, and he was asked about Too Big to Fail, and he said that Too Big to Fail very much still existed. And that's a very different response, by the way, than he said when he had the title of Treasury Secretary. He publicly said prior to Dodd-Frank being passed that Too Big to Fail would be eradicated by Dodd-Frank. In private now, in this class, he says something very different. So, you know, his view is that, you know, you will never really be able to take the fire department away, and that he would even argue that it's misguided to take that fire department away because there will be another crisis in the future.
Andrew, terrific job. Thank you so much for joining us tonight.
Thank you for having me.
Andrew Ross Sorkin. Ty?
A new study says that Medicare spent nearly $2 billion on patients back in 2009 for tests and medical procedures that had little or no health benefits. In the first large-scale study to directly measure wasteful spending in Medicare, Harvard researchers at the medical school there found that at least 1 in 4 Medicare recipients received 1 or more unnecessary or ineffective tests or procedures that year. The study results were published in today's Journal of the American Medical Association.
Well, here's something you don't often see, a federal budget surplus. Washington ran a $107 billion surplus, in fact, in April, thanks to all of those individual and corporate tax receipts coming in last month. More good news as well. 7 months into the 2014 fiscal year, the federal budget shortfall is down 37% from last year.
Still ahead, IBM's stock price has been stagnant, basically, and the CEO admits this is a rocky patch for the company. But is her plan to get Big Blue back on track enough to jumpstart sales?
First quarter earnings out today from Chrysler, a unit of Italian automaker Fiat. Even though Chrysler saw big sales gains for its new Jeep Cherokee and the Dodge Ram pickup, it lost a ton of money. But Fiat says the $690 million deficit was due to costs related to the merger. If you take those out, net income for Chrysler was nearly $500 million.
Chrysler, Ford, and General Motors all faring poorly in their relationships with auto parts suppliers. In the latest annual survey done by the industry, more than 400 suppliers were asked about their overall relationship with the 6 biggest car makers in the United States and about things like tech support, cooperation, communication. Toyota, Honda, Nissan, top marks, followed by Ford and Chrysler. General Motors was last. Meantime, attorneys for the parents of a Georgia woman killed in a car crash linked to General Motors' faulty ignition switches are refiling a lawsuit against the automaker, even though they already settled the case with GM, citing the admission by GM's CEO Mary Barra that an engineer in the case may have lied under oath, concealing serious problems with the cars.
Some of the nation's biggest retailers are out with earnings later this week, including Walmart, Macy's, and JCPenney. But some are warning that all the steep discounts and other promotions that retailers had to offer this past winter and well into the spring may have a big impact on their bottom line. Courtney Reagan has more.
Not everyone loves a sale. Sure, it makes shoppers feel good, it helps drive traffic, but it also squeezes profit for retailers. This past holiday season was one of the most promotional in recent history, and retailers are still offering larger than normal discounts. The harsh winter crimped retail foot traffic, so the sales were deep as stores hoped to clear inventory. But with 40% off less the exception and more the rule for some retailers, investors are starting to worry.
Last year, the norm became 40% off. Why is that important? Because it comes right out of gross margin and therefore right out of the bottom line. So if you don't have some way to offset this, and that's what's happening, and I believe it's going to be going on for a long, long time, I don't think it was temporary, then you're getting less return on your investment than you expected to get.
According to the Sale Tally ICSC Promotion Index, discounts across specialty and department stores are 5 to 10% larger this year than in 2013. Ann Taylor, Express, J. Crew, Gap, Banana Republic, and Old Navy are all offering promotions above last year's levels. Ann Taylor, Gap, Old Navy, and J. Crew's promotions are also deeper than the index average, which suggests profit margins are going to be impacted more at those retailers when earnings are announced in the coming weeks. But former department store executive Jan Niffen isn't concerned about the impact on Gap and its Old Navy and Banana Republic brands' bottom lines.
They're big, they're powerful, they have a loud voice, they're a large company, they have great clout with the factories, and so their ability to offset it is going to be better than other people trapped inside the mall.
Specialty retailers aren't the only ones offering deep discounts. Department stores like Macy's are doing it too, but Macy's size allows more opportunities to cut costs to soften the hit to the bottom line. But what about the long run? Some think retailers are inadvertently training shoppers to only buy when there's a 40% off sale, a costly habit to break for both sides. For Nightly Business Report, I'm Courtney Reagan.
The reported deal between DirecTV and AT&T may be heating up, and that is where we begin tonight's market focus. Earlier this month, we told you that AT&T reportedly approached DirecTV about a possible takeover. Well, now there are reports that the two companies could strike a deal as soon as 2 weeks from now. That sent shares of DirecTV higher after the close. During the regular session, the stock was off a fraction to $87.16. Shares of Core Laboratories got hammered today after the company lowered its guidance. The energy services provider cut both its second quarter and fiscal 2014 outlook, and the stock tumbled more than 11.5% to $167.02. Shares of Tesaro surged after the drug maker announced its medicine that prevents chemotherapy-induced nausea met late-stage study goals. The company aims to submit the drug for approval in mid-2014. The stock spiked 21% to close at $29.05.
Go-Go shares were on the go in today's trading session. The in-flight internet provider posted a better-than-expected 35% jump in quarterly revenue as more travelers used its services. The company also saw an increase in the amount of commercial aircraft providing Go-Go. The stock rose 6% to $12.67. Elizabeth Arden reported ugly third-quarter results. The cosmetics company saw revenues decline by 20%, hurt by weak sales in North America in its perfume business. The company says it is exploring strategic alternatives. The stock was initially halted after the report, but then it reopened down double digits during the regular session. Shares were up almost 2% to $35.63. And Rackspace's first quarter earnings beat the street's estimates, and its revenues were pretty much in line. The cloud company saw higher demand for its web hosting services. Shares spiked after hours, up as much as 11%. During the regular session, shares were almost 5% higher to $27.53.
IBM is getting a lot of attention today. Its CEO, Ginny Rometty, telling the New York Times Big Blue is facing a rocky time. but that the tech giant is poised for growth. How much growth might be in IBM's future? Let's get some answers from Lou Masosha. He's Managing Director of Enterprise Hardware with CLSA Americas. Lou, welcome. Good to have you with us.
Okay, thank you.
Do you have a rating on this stock? Do you like it at these prices? It's been basically flat to a little bit down over the past 12 months.
It has. We do actually have a buy rating in the shares and a $225 price target. We're really looking out to the end of the year when we think a lot of the investments the company's making are going to start to kick in, and we would expect their business to start to turn by then.
Lou, what's wrong with Big Blue? Is it one major aspect of the company that is not firing on all, you know what I mean?
Cylinders, sure.
Thank you. Or is it many things at IBM that aren't working?
Well, it is a number of things, and it's a number of things that have actually hit sort of all at once. In the hardware sector, which is about 15% of revenue, you know, they're not in the good cycle of their main freight cycle, which is an 8-quarter cycle. So, but that should come back either at the end of this year or early next. Their power business has also been weak. So that's the area that's really dragged them down. From a geographic standpoint, the emerging markets, which had to actually been stellar growth for areas for the company, also hurt them. But Europe is starting to come back a bit, and we expect by the end of the year, U.S. to start to return. So it's both a geographic thing and also a product thing. But we believe they're making a lot of investments to offset these issues.
Do you like what Ms. Rometty is doing, and is she doing it fast enough?
Well, I think there is a little bit of a perception that she's not doing it fast enough, but actually she's made quite a bit of investments. Besides all the acquisitions IBM historically makes, they did SoftLayer last year. That was $2 billion. Then they decided to invest an additional $1 billion on top of that to double SoftLayer's footprint, which competes with Amazon's AWS and Google and Microsoft in web hosting. They're also investing in some of the hardware business in flash computing, in the power systems, and Watson. So we think that she is stepping up. And as you know, Wednesday is an analyst meeting. We expect her to try to highlight some of these opportunities that she sees in front of the company. But
is acquisition and investment the way to go, or do they have to fundamentally basically shake the tree and change the way a lot of the different units in IBM function? Or maybe it's both?
Well, it's probably a little bit of both. You know, the software and services area, 80% of revenue, most of the profit has actually been doing okay. Software doing better than services. Services growing slow, but actually with very good margins. So don't really look for huge changes in those areas. But you know, they're not standing still there either. They're actually taking all their middleware, a good portion of it, investing $1 billion there and turning it into applications for the web. So we don't believe that they're sitting still. We think that they're looking towards the future and actually starting to react and invest in it.
This is a multifaceted company. Obviously, that's an understatement. But Lou, who do you consider their principal competitors to be, and how do you rank them as a performer and as a stock against those competitors?
Well, I think when you look at their traditional competitors, the other big tech companies, whether it's Cisco or EMC, which they compete with many of those in slices, or Oracle, many of them are actually having difficulties growing now. And obviously, I'm sure you've talked on this show many, many times about the cloud. So I think that the real competition is the secular changes in the IT industry, which are some of the things IBM is trying to now change and reform themselves with the investments that they're making. So I wouldn't say that there's any one large IT company that's really hurting them. I think it's more the secular changes in the IT industry.
Lou, thank you very much. Maybe we'll have you back after that Analyst Day on Wednesday. Lou Masosha with CLSA Americas.
Coming up, bring on the heat. Why a small factory that makes a spicy sauce is turning into a very hot commodity. A popular Asian hot sauce is the latest battleground in the war between California and Texas for jobs. And it's proof that for states seeking a competitive edge, no potential victory is too small. Scott Cohn reports from Irwindale, California.
Everything you need to know about the war between the states for jobs is in these 28-ounce bottles. They're filled with sriracha sauce. As many as 200,000 bottles of the stuff come out of this plant near Los Angeles every day. Today, a state representative from Texas is trying to convince the plant's owner to move the whole operation to his state.
We've got a low tax environment. We've got a low regulatory environment. We've got a fair legal system.
He sees an opening because the company, Haiphong Foods, and its owner, David Tran, are in a dispute with the city. Residents say the odors coming from the plant can be unbearable.
My sister has a toddler, and we actually don't bring her out when you can smell it because she'll start coughing and it's just not safe for her to be out.
The city has declared the plant a public nuisance, sued in court and won. Tran suggested he may have to move. That mere suggestion has set off a feeding frenzy, heavy on the sauce. As many as 15 states and cities have come calling, promising to be more hospitable. Remarkable, since this plant represents only 80 full-time jobs.
This is Texas Governor Rick Perry, and I have a message for California businesses. Come check out Texas.
Texas Governor Rick Perry has had much bigger successes in his campaign to poach jobs, including Toyota and Occidental Petroleum, both leaving California. Texas has no corporate or individual income tax, the pitch goes, a welcoming business climate, and apparently neighbors with less sensitive noses. David Tran says he's staying put in California for now.
I need to expand. In the meantime, I need to keep this brand running.
He says he may expand in Texas, a pungent reminder in California that the competition for every single job is hot, hot, hot. Scott Cohn, Nightly Business Report, Irwindale, California.
Have you ever had that sauce?
It's good sauce.
It's really good sauce.
It's very good.
Well, wherever they end up or wherever they stay, it's really good sauce. Give it a try. That does it for Nightly Business Report for tonight. I'm Sue Herrera in for Susie. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow night. I'm Tyler Matheson with a Nightly Business Report news brief. Another record-setting day in the markets with the Dow and the broader S&P 500, both closing at fresh all-time highs, thanks to a rebound in beaten-down technology and biotech shares. That also helped the Nasdaq see its biggest one-day gain in more than a month. Here's how things wrapped up on Wall Street today. The blue-chip Dow stocks added 112 points, ending at a record 16,695. Nasdaq up 72, and the S&P rose 18, a new high there of 1896. The government ran a $107 billion surplus in April, thanks to all those tax receipts. And ballpark Franks maker Hilscher Brands will pay more than $4 billion for Pinnacle Foods, the maker of Duncan Hines Vlasic pickles and other brands. And tune in to Nightly Business Report here on your public television station.